Hi, this is Sean Casey from Trade Canary, and today I'm going to show you how to sell a call option on Charles Schwab. First thing you need to do is log into your Charles Schwab account, and once you do, you can go up here to the trade and click. And when you do, you could choose options, stocks, whatever. In this case, we're going to trade options. So we'll click on that. See, it shows streaming data not currently available. It says that because the market is not open right now. And then you can take whatever the stock is that you want to sell an option on, or which is probably one you own now, unless you're just opening up a separate position, which is a more complex advanced strategy. But let's just say I want to type in Intel. So INTC, I verify that's Intel Corp. And then it will show me all the current trading information as of the market close for what the pricing is. The last price, 23.61. Then I come down here and I select an action. I could buy to open, not what I want to do. If I did that though, it would show green. It's showing that I'm buying. If I'm going to buy to close, which means that I have sold a position and I need to close that position because you have an open position when started, you've sold or bought initially. You want to close that position. There are times in the trading strategy, and maybe you've done this, where you've sold an option and now you need to close the position by buying back those options. Sell to open, that would be where I'm selling the option in advance, and that I would use the buy to close for that. Or in this case, I already own the stock option, so I'm going to sell to close. And you can see that selling is red, not because it's bad or it's wrong, but because then you know you're subtracting, and you could get a double check. Oh, I intend to sell. You would choose the number of option contracts that you have that you're going to sell. You don't have to sell all of them. You could sell part of them if you own a lot of them. And then you would go, and you're obviously in Intel, you would pick whatever your strike price is. In this case, it defaults to 23.50 just because it's closest to what the stock is, and the most current upcoming expiration date, which is February 21st, but you might own the April 17th calls, in which case it jumped from 23.50 to 23 because they don't offer a strike price at 23.50 in April at this point. But whatever the exact call is that you currently own that you wanted to sell, you would choose that expiration date and the strike price. Then you're obviously selling a call, and then you can see the current pricing. This is the bid, what somebody would pay for that option if you just put it up there and wanted to sell it right away. The ask, 248, is the price that somebody else is asking that they'd like to get paid for it. And the mid-range, which is often where the price will actually trade, which is why they show that, because you could enter your order at that midpoint if you wanted to sell right away. Don't have to sell right away, but if you wanted to, that's probably where it would trade if the market was open. Where the market will open on the next trading day, the stock may be up or down before that, which is why when we come down here to place an order, we have some options of what we can do. One of which is place a limit order, means that you would only sell, in this case, they default to the bid price, but I could click here and it would change to the limit price, or I could even raise it up to 241, or I could type in that I only want to take 255, whatever my price is, I want that price or better. And I can leave that trading open for the day or good until canceled, which in this case, because the expiration date is April 17th, the last day that would trade is April 17th, right? That makes sense. I have some other options. I could sell at the market. Usually not a good idea because you don't know what you're going to get. You're just going to get whatever the price is. It's probably not going to be better than 227, could be worse. Lots of people try to sell at the same time. Normally better trying to sell at least with a limit. A stop market order allows you to set a price. And the reason to set a price might be you really like Intel and you think it's going higher, but you've made a good gain, or you just want to protect your position and you don't want to let it come back too far. And you might say, okay, look, it's at 227 at a minimum. Maybe the last trade was at 238. And you're going to put in here $2.10 and say, look, if it backs up a little bit, I want to get out. And I want to get out at the market, which means that it would immediately trade whatever the best bid price is that it can find once the price trades at $2.10. That market price may be less than $2.10, but it would immediately trade. And you could set this option to either be to sell for just the day, which is the normal trading hours of 9:30 to 4, or good until canceled all the way up again till March or till April 17th. I could also set a stop limit order. Stop limit order is different in that I could set it and say I want to only sell if the price backs up to $2.10. And that my limit price, I can set the price that I'm willing to take for this. I don't have to set the market and just let it go crazy. I could say I'm only willing to take $2.10. If the price falls quickly, it might not trade at 210, but you don't have to take less. You could wait for it to hopefully come back up in price. Or you could set a little bit lower price and say, look, if it trades at 210, this is it has a lot of volume in Intel options. Maybe I'll say, look, I'll sell it for 210 will trigger my trade. And at 205, I'm willing to sell. If the market would pay 210, the trading system will get you $2.10 or $2.08, but you won't sell for under $2.05. And again, you could choose good till canceled or good for the day, whichever you want to do. I can't click review order because I don't currently own this option, and it'll just tell me that my system is wrong. But if I did, it would show me the page like the other strategies we've shown you where you can review the order to sell, make sure everything is okay. Click change if you're not happy with it. Click cancel if you don't want to actually do it. And of course, anytime after you make an order, unless it's been filled, you can cancel that order and not have any problem where you've got to continue to to be stuck with the trade that you don't want. I hope this has been helpful in showing you how to sell a call option on Charles Schwab. Wish you the best of luck in your investing.